Hello everyone, and welcome to this presentation on Specialist Trading's Dynamic Duo. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading, and if you're new to our website or new to our presentations that I give roughly once or twice a week, we are first and foremost an educational company. As you'll see today, it's our philosophy that sound fundamental education is what's really going to sustain you as a trader. It's not some perfect strategy or system. It's not some unique indicator or following, firsthand fundamental news. It's more about empowering yourself with this information so that you can ultimately make your own trading decisions. The reason I say this is because I've been trading for 38 years. I started on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of them I was a specialist for Donaldson, Lufkin, and Jenrette. That's where we get the name specialist. But basically, I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the bull market that followed. And once I left the floor, I managed money and pursued my own trading. And roughly about 7 years ago, I teamed up with Pro Trader Strategies and I started teaching and mentoring all of my students the things that I have accumulated in my 38 years and techniques that I currently use. And what I found out is that there is no one right, perfect way to trade, no way that will guarantee you success. The only thing that you really have in your favor is empowering you with information and then making your own trading decisions. Too many traders fail because they're relying on someone in some trading room or chat room to tell them what to do or how to trade. They're relying on what they hear in the news. They're relying on some special indicator. And then ultimately, when it doesn't work, when it fails, they don't understand why and they have nothing to back their trading up with. So we want to put you back in control and empower you with this information that has stood the test of time. So that's what we do at Specialist Trading. And today I'm going to give you two really great methods that we have seen that actually from the feedback from our members and students that really increases your odds for success. By success, we mean consistency. All right, we're not going to sit here and tell you that every trade is a winner and that every trade produces thousands and thousands of percentile points. What we're going to tell you is that you can really increase your odds for success by using these two methods, and that's why we call them our dynamic duo. Now, before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying our dynamic duo, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we're required to show you this, so please take a moment to view it. And while you're doing that, if you haven't done so already, I would like to invite each and every one of you to follow us on Twitter. There's our handle right there, at SPCLSTTRADG. You can follow us there. I post things on a daily basis, anywhere from daily financial wisdom, little tidbits I've accumulated along the way, to actual signals that our strategies have generated. So once again, if you haven't started following us, a lot of great but limited information that you'll be able to get through us on Twitter. Now, one more thing I'd also like to announce, because it's coming very close, roughly about 3 weeks, I want to invite each and every one of you to join me for a really amazing trading event, which is going to be held in just about 3 weeks in Las Vegas. It's the Trader Super Conference. Now, I was asked to speak at this last year, and it was a great, great conference, lots of great information, lots of great speakers, and they're doing it again, and I just want to thank them at Trading Winds who are putting on this presentation. They've asked me to speak again. It was such a hit, and we had a lot of people there that learned a lot of great things about trading. It's 2 full days of education, October 17th to the 18th. You're going to see 7 trading experts. They're going to cover topics such as stocks, options, commodities, and I'll be covering futures and forex trading. There'll also be a cocktail reception, panel discussion, and if you look below, that is the link that you want to go to for more information. I believe they may still have some discounts available. I'm not sure though, so check out that link. You may want to copy and paste that onto your browser. Now, once again, this is being held October 17th through 18th in Las Vegas. I'd love to meet all of you. I got to meet a few of our members last time I spoke, and it was great. You know, I converse with you, through email and through these webinars, but it was nice to actually meet you in person. So if you'd like to meet me, possibly share a drink, come on down for the cocktail reception as well, and I'd love to get to know you. And once again, copy that link down below. The best thing about this conference is that it's going to be held in Las Vegas. And if you've been to Las Vegas before, and if you know where the best places to stay or to meet, it's at Caesar's Palace. That's where it's going to be held. So I believe if you mention that, they'll give all the information on the website, the link I provided. You get a discount for rooms, but there are also lots of places as well to stay in Las Vegas. So we'd love to see you there. We'd love to talk to you more, and we can meet, and you can also hear a lot of more great speakers. All right, so as we stated in the beginning, we are an educational company. You know, we're not like these other websites where they just simply tell you what to buy, what to sell. They force feed signals, on you every day, or they tell you what market to be in. We don't believe in that. In fact, we really believe that's a recipe for disaster. Because if that works so well, why are upwards of 80% of all traders failing in the markets? It's because we feel basically most traders give their power away. They let someone decide how to trade for them, when to buy, when to sell, and so forth. So as you can see here, my goal is not to do that. I do not want to force feed you signals. My goal is to teach you how to trade so that you can ultimately make your own trading decisions. This is the same process that was able to turn my trading around some 38 years ago. And this is the same edge that I teach to all of my students and members. So we have members and students in over 92 countries around the world, in virtually every state of the United States. So a lot of people are finally getting onto that road to consistency. So I invite you as well to learn how to trade with the Specialist Edge. So this is what we do, and this is what we teach. Now, I'm going to teach you two great edges today. These are two methods that have a very high level of consistency. But when we found that when you put them together, you really increase your odds for success in terms of consistency greater, tremendously greater. So this is what I'm going to be sharing with you today. And I'm not going to just cherry pick. I'm going to show you how these methods work. I'm going to show you some losing trades with these as well, just to show you that nothing is 100% of the time. Okay, so we'll show you, not only the winners, but the losers as well, and then how we can, filter out some of these losers. And then lastly, I will give you two of the rules to one of these methods. All right, so you're going to have really about a third of the rules to one of our best strategies. All right, so let's begin. Just one last thing before we begin. If you have any questions, I kindly ask that you wait till the very end of the class to ask any questions. I'm going to present a lot of information and a lot of really valuable stuff to learn, and we tend to bog down the presentation if we stop every 5 minutes to ask a question. And many times if you wait for the next slide, your question is answered. So please wait till the end, probably about 20-25 minutes, and then we'll go over and reserve the rest of the time just for answering and asking any questions you may have, okay? The one question I will answer is this being recorded? Yes, it is. So if you're having technical difficulties, or if you have to leave early, you can go to Pro Trader Strategies and they will send you a link to this recording. All right? So let's begin. And let's start out with method number one, which makes up a portion of our dynamic duo, and that is strategy number 4. Okay? Let's give you some of the highlights behind this strategy. It's for virtually all traders, from beginners to advanced. We have hedge fund traders trading this who have been trading for 50 years. We also have beginners trading this who've been trading for about 50 days. So it doesn't really matter how long, what your level of experience is. Everyone gets the same basic format in the beginning, all right? Now, it's basically designed for traders looking to catch quick momentum moves. That's the way I was introduced to it on the floor, because as a floor trader, we were virtually in and out in like 5 minutes. So this was a great strategy to really capture those quick gains. But I will show you ways, and in the course I show you ways in how to stay in it much longer if you'd like. Now its intensity level, from 1, if 1 were the most intense of all strategies where you had to be glued in front of your computer, and 3 was the least intense where you could basically just walk away, enter an order and walk away, it falls right in the middle. It's very moderate intensity level. It only uses one indicator. That's how simple it is and how practical it is. So it's basically a pattern recognition strategy. Now this strategy works in any time frame, any direction, in any market. That's the beauty of it, and that's why we feel it's probably our most popular strategy, because it transfers over onto all markets and time frames, and it's probably the most consistent strategy out of all the roughly 10 or 12 strategies we teach and trade at Specialist Trading. Now, if you become a member of strategy number 4, you receive automatic buy and sell indications. In other words, we supply you with green and red arrows when a signal has been generated. But please remember, this is for educational purposes only. Remember, it's not our philosophy just to blindly tell you when to buy and when to sell. You're not going to learn anything from that, and most likely you'll probably lose. We just provide these for educational purposes so that you can know what to look for. And then ultimately, once you know what to look for, you really don't even have to rely on those up and down arrows anymore. Our edge here is consistency. I'm not going to promise you that every signal and every setup works, but trust me, there is a very high level of consistency just by trading strategy number 4. Every once in a while you will have some small losses, and I'll show you those in just a moment. And I'll show you how to get out of the way of those as well. All right, so let's first give you rule number 1 to this strategy. As I stated, I'm going to give you a couple of the rules. The strategy only has about 5 rules. I'm going to give you 2 of them today. So you can incorporate these in your own strategies, or you can build a strategy based off of them. But buy signals for rule number 1 can only be entered above the 50-period moving average. All right, so even if your setup bar is halfway below the 50, as long as your entry is above the 50, it's valid. Now, ideally, we'd like to see all the bars above the 50-period moving average. But just remember, in order to go long using strategy number 4, buy signals can only be entered above the 50-period moving average. So, conversely, if we're going short, sell signals can only be entered below the 50-period moving average. Okay? So once again, you can have the setup halfway or partially above the 50, but as long as your entry is below, it's a valid setup. We can only go long above, and we can only go short below. Now, I know a lot of people say, well, what's the use of this? It doesn't really seem like this would, hold a lot of weight. But if we look at some prior examples, you'll see, remember, we're all about consistency. We're not going to tell you that something works 100% of the time, but if you use this simple rule, you'll really increase your odds for consistency. If we look at this chart here in ATV in August, we see here basically it's just kind of going sideways. There's no real trend to this, but at the same time we are above the 50-period moving average. So someone would say, who didn't know about this rule, someone would say, well, I'm going to look for both buy and sell setups. But now that you're a member of Specialist Trading and you know rule number 1, you're only looking for buy setups. Why? Because you want to put the odds in your favor. And later on, you saw how the odds were put in your favor. You would have lost a lot of money looking to go short. That's why we never short above the 50. Now, conversely, we can also look at this example in KSS where the majority price is below the 50. All right, as we see here, coming into May, we were above and then we crossed, so the majority of price bars were below. So even though someone in some chat room or trading room could tell you you've got to buy this stock because it looks really good, either some news going to come out, some fundamental news, or it's hit some Fibonacci support level, we will in no way buy it if it's below the 50-period moving average. Why? Because you should only be selling below the 50-period average because the odds are in your favor. Okay? So that's rule number 1. Rule number 2, once we realize what side of the 50-period moving average we're on, we're going to look for a bar that closes in the top or bottom 25% of its range. This is our setup bar. This is the bar where everything comes together and we can go long either at the close of that bar or the opening of the next bar. It's up to us. Now, this is what we mean by top quarter of the range. Now, I know a lot of our students, especially beginning students, get confused when they look at a bar like this as opposed to a candlestick bar. It doesn't matter what type of bar you're looking at. When we talk about range, we mean extreme high, extreme low. So it doesn't matter if this is a 5-minute bar. It doesn't matter if it's a candlestick bar. It doesn't matter if it's a an open high low close bar. It doesn't matter at all. All that matters is you take the extreme high and the extreme low and you divide it by 4 separate equal parts. Okay. Now the top part is the top 25%. So you want to close in that top 25%, and that is an indication to buy. That's when everything comes together and you can go long. Conversely, if we are below the 50-period moving average, well, it doesn't matter if this were a candlestick bar, we take the top of the wick to the bottom of the wick, or we just take the extreme high, low range, divide by 4 separate but equal parts, and the bottom quarter is what we're looking for. If we find a bar that closes in the bottom quarter, that's our indication to sell. But please remember, these rules are applying to strategy number 4, but you can apply them to any strategy. So in other words, let's say your strategy is based off fundamental news, all right? And you get an order to sell or some type of signal to sell. Well, first of all, it should be below the 50-period moving average. And don't sell until you see a bar that closes in the bottom 25%. All right, it's that simple. But luckily, strategy number 4 already has these incorporated within its base. All right, so let's look at some strategy number 4 examples where you'll see both of these rules employed. All right, let's look at stocks for all you stock traders. MSI, all right, we were below the 50 period, but then we started to have consistent closes and the bars were entirely above the 50 period moving average. So what does this tell us? It tells us we're only looking for buy setups. Now, obviously, I can't give you all the other rules to this particular strategy, but we look here, we're above the 50, and here's a bar that closes in its top 25% of its range, okay? Now, obviously, there are other bars here that close in the top 25. This one did, so did this one, and even this one, I believe, may have, but they didn't meet all of the requirements of strategy number 4. But this particular bar circled in blue did, okay? So it's a buy signal, and the add-on automatically generates a buy signal. So look what happened to the stock going forward. As we can see here, in the next month, the stock basically went up from 59 all the way up to 67. Okay, so about 8 points there in the next couple of weeks, or next month, I should say. That was an actual signal generated by strategy number 4. If we look at ADSK, this was just about a month ago, not even a month, about 3 weeks ago. Obviously, we're only going to sell. Why? Because we are below the 50 period moving average. Now we want to find a bar that closes in its bottom quarter of its range and that also meets the other 3 rules of strategy number 4, and that's this bar right here, okay? So this is our setup bar to go short. The software automatically generates a sell signal, a sell red arrow there, and look what happens. The stock goes from 47 down to 43 in the next 4 days, okay? This was just the last week of September. But now I want to show you this, and I want you to remember this. This is Tesla. You know, we ask ourselves, where is price in relation to the 50 period moving average? Price is below. So are we going to buy anything? No, we're only going to sell because the odds are in our favor. Remember, it's not guaranteed, but the odds are in our favor if we sell below the 50 period. Now we want to find a bar that closes in the bottom quarter of its range and that also meets all of the other 3 rules of the strategy, which is this bar. So if you were so inclined, if you had a big enough account size, because this is a $250 stock, or if you were trading options, you would either go short at the close of that bar or at the opening of the next bar. And let's look what happened. A sell signal was automatically generated. It met all the rules, and it didn't work. Okay? I want you to particularly remember this example because we're going to come back to it. But remember, they do not all work. There is a high level of consistency. But remember, we're saying consistency. We're not guaranteeing you, like some other websites, all winners 100% of the time. Let's look at the E-mini S&P. We're using the same strategy, the same technique. Here's a little bit more difficult example here, but one that was extremely valid and that worked tremendously well. As you see, price is oscillating above and below the 50 period moving average. This is where beginning students always have a difficult time because they say, well, Steve, I don't know what I should be doing. Should I be buying? Should I be selling? We're not above or below. Well, we always tell our students, if you don't have a clear-cut idea, don't do anything. There's no, absolutely no rule that says you have to trade. There's absolutely nothing you have to trade, okay? But if you want to, if you feel comfortable enough to, well then go ahead. Now a valid signal was generated on this bar right here to go short. We closed in the bottom 25% of the range, and we were below the 50 period moving average, and it met all the other rules, okay? So therefore, we got an automatic signal to go short. Now this happened to be in August, the last week of August, and remember what happened in August in the market? I think you all remember what happened. Now a lot of people are going to blame that on the the hedge funds, and a lot of people blame that on high-speed computerized trading. Other people blamed it on news coming out of China. Well, it's funny because we don't listen or care about any of that stuff. All we do is focus on what the market is telling us. And the market was telling us through strategy number 4 to go short the market. Okay, this is well before the sell-off occurred. So this is the consistency you have using strategy number 4. Now, just very quickly, I see that some people may have difficulty with the sound. They're having difficulty. What we've been told many times is that if you're having difficulty hearing, log out and then log back in, maybe something with your personal computer, okay? But just real quickly on the question and answer box, if you could type in if you're hearing everything okay before we begin again and go into more examples. Just let us know if it sounds okay. Yeah, it seems the majority of people it's coming through loud and clear. So I think it's just a personal issue with your own computer. Once again, the best remedy for that is to simply log off and then log back on. Okay, looks really good. So let's go back some more examples. All right, that's a daily chart. Let's bring it closer to home here with a 60-minute chart. All right. Now we are originally below the 60, the the 50 period moving average, and then we cross back above. So let me show you some examples here. Here's a bar that closes in the bottom 25%. It's below the 50 period moving average. So an automatic sell signal was generated, and this worked out fantastically. This was just about 2 weeks ago at the very end of September on an hourly basis. Okay. So roughly you could have gone short about 1925. The E-mini in one day went all the way back down to like 1870. So we're talking about 50 points here, $2,500 per contract in just a couple of days. Not a bad trade. Now later on, another signal was generated to go short right here. All right, close in the bottom 25%. Automatically met all of the rules. A sell signal is generated, and this one didn't work out at all. In fact, you would have most likely been stopped out rather soon on this. All right, so it's a losing trade. But then as we go further along in time, we see another signal is generated here. We are below the 50 period moving average, but we close above and our entry would be above. So this is a valid signal. Even though it's a little bit more advanced, it's a valid signal to go long, and you could have gone long roughly around 1905, and the E-mini during that day went up roughly about 40 points, all right, about $2,000 per contract. So you see the consistency in this, all right? We had 2 winning trades, 1 losing trade. The first trade made about 50 points, second one lost about 20, and then the last one made about 40. So on balance, you made about 70 points at $3,500 per contract, just trading 1 contract. And this was just in about a week's time trading an hourly chart. How about the Forex markets? Let's look at the Canadian dollar. All right, this is an easy one. The majority price is above the 50. So are we going to short the Canadian dollar at all coming into October? Not at all. We're only going to be buyers. And the software sees that we have 3 bars here that meet all of the rules. They close in the top 1/4% of their range. So the software automatically generates buy signals. And each one of those would have generated a gain. All right. It doesn't matter what market you're trading strategy number 4 in, whether it's the E-mini on an intraday basis, whether it's stocks on a daily market, or whether it's the currency pairs on a weekly time frame. Here's the Australian dollar on a weekly basis going back to last year, last August of 2014. We were above the 50 period moving average at that time. All right. Here, let me just backtrack. See, we don't complicate our trading by looking at 2 different time frames at a time. In my 38 years of trading, I've seen no consistency in that. And to me, it's just been a waste of time because I'm waiting for the 2 time frames to come in sync. I know a lot of educators always, trust that method, say you must look at the higher time frame to tell you what to do on the lower time frame. I personally have never used that because there's no consistency in it. Okay, so we only concentrate and use and apply the rules on the time frame we're trading. So in other words, if I'm looking at a weekly chart, I don't care what the monthly chart is doing. I don't care what the daily chart is doing. I'm just following the exact same rules on looking at bars. They meet the same requirements, but in this case, these bars are weekly. We're still using the 50 period moving average. And where is price on this weekly time frame? Price is above. So here was a buy signal that was generated. You see we close in the top 25%. It meets all the other rules. So the software generated a buy signal for this weekly chart. And then look what happened. Didn't work out, okay? As I stated, they don't always work. So it's okay because, as I stated, strategy number 4 is extremely resilient, and another signal was generated on the bar that stopped us out to go short. So that's the one we wanted to take, and then look what happened. The Australian dollar on a weekly time frame has continued to come down. As you see here, this is a chart coming into October of this last month. I mean, this is a very recent chart. So the Australian dollar has not stopped going down. It's been below the 50 period moving average as well. So we've seen how strategy number 4 works. We've seen its consistency, but we've also seen that some trades work and some don't. We see this a lot as we look at this example in Urban here. This is an older example, but a buy signal was generated, and obviously it didn't work. Obviously, you would have been stopped out. And then later on, a sell signal is generated, and that one works perfectly, okay? But then again, you'll still see sometimes when a signal is generated, as we see here in this older chart of CVX, and it doesn't work at all, okay? There's no chance to have another signal generated. So we have to ask ourselves, how can we increase our odds for success? Remember, there is a very high level of consistency trading strategy number 4 alone. But would there be a way to filter out the bad trades? Because we saw trades where, we lost, and we'd rather filter some of those out. We know we can't filter all of them out, but if we could filter a good portion of them, we would increase our odds for success, okay? So how do we do that? Well, this brings us to method number 2. All right, we went over method number 1, now we're going to method number 2. And once again, if you have any questions, kindly wait till the end of the presentation. I'll answer the questions at that period. So method number 2 is simply the PET D. All right, what is the PET D? The PET D is something I was introduced to roughly 30 years ago on the floor of the exchange. It's a proprietary algorithm. All right, now at the time, when I was first introduced to it, it was something I had to calculate by hand, so I could only use it on daily charts because it was kind of cumbersome. But now with high-speed computers and programmers, we've been able to assemble it into an algorithm, and it's basically just a color bar tool. So there's nothing you have to do yourself. It's automatically done for you simply by coloring the bars either green or red. Now what it does is it identifies trend. It is the best thing that I have found in my 38 years for identifying the short-term trend. It is amazing. I'm going to show you a few examples right now. But we've also found out through the dynamic duo is that it's a fantastic signal confirmation tool. All right, so let me show you exactly how it works. Remember, if you see a series of green bars, the short-term trend is up. And conversely, if you see a series of red bars, the short-term trend is down. That's how simple it is. And these bars do not repaint or recolor themselves. So once a bar closes, whether that's a tick bar, or whether it's a 5-minute bar, or whether it's a monthly bar, the minute that bar closes, that color will remain the same. We never repaint the bars, so you don't have to worry about that. It's not that type of a tool. Now, if we look at this example here in HRB, we see here that, well, we had a nice uptrend here in the stock. It was going up, and then it kind of just flattened out and then went straight down, okay? The trouble with many trend indicators and trending tools is that they're lagging tools. They're very difficult to find out when a trend has changed, and oftentimes once you find out the trend has changed, it's too late, or you miss or give back a good portion of your profits. Well, how could the PET D help us? Remember, the PET D is a color bar tool. If the bars are green, you're in an uptrend. The bars are red, you're in a downtrend. So I can tell you what side of the market to be on. Once we apply the PET D, we see here that we were green the entire time up. Sure, we didn't get out of the top, but right here was the last green bar. And then look, right here, we started to change well before the market fell out of bed. Okay, so this was giving you advanced early warning that most likely you're going to have a change in trend. And the rule of thumb is anytime you see anywhere from 3 to 5 bars that are colored the same, that's your warning that the trend has changed. All right, so right here we had at least 3 bars. The rule of thumb, once again, is anywhere from 3 to 5 bars. We can apply this to weekly charts. Here's a weekly chart of the E-mini, an older chart, but we see here that in hindsight, where you say, well, yeah, it was easy to find out that we were in an uptrend looking back 2 or 3 years. But if we apply the PET D, we see as far back as 2013, we had consistent green bars. Sure, every once in a while we'd have a red bar, but remember, the rule of thumb is once you see 3 to 5 bars in a different color, that's your change of trend. So up until then, we still had all green bars. We can apply this to intraday trading. Here is the British pound on a 4-hour chart. Once again, in hindsight, someone could say, well, this is simple. Sure, it's easy to see that we're in a downtrend, but how would you have liked to know you were in a downtrend all the way up here? Well, we had 3 bars in a row telling you to go short, or telling you that at least the trend had changed. Not necessarily it's a signal to go short, but if you're long, you may want to get out, or you may want to move your stop up, because most likely the trend has changed. And the British pound basically dropped about 100 to 200 pips in the next week. Now look at this great example in ABX. This is an older example here, but just to show you how well this works. Now ABX, as we look here at the small sample, was originally all green, but then right at this point, we changed and here had consistent red bars. This is our signal telling us that boy, if you're long ABX, you should get out roughly around the $18 mark, or at least move your stop up, because it doesn't look like we're going to be in an uptrend anymore. In fact, the PET-D is screaming that we're going lower. And look what happened. The PET-D gave a downtrend signal in ABX, and the stock dropped 40% in 2 months. All right. I don't know of any other indicator or tool that gives this high level of consistency in warning you when a trend has changed, such as the PET-D. The PET-D really, as I stated, I've been using this for over 30 years now, and it has helped me tremendously. Now, it also flies in the face of news. Now, it doesn't work 100% of the time in telling you in advance what the trend is before a news event happens, but I've seen it work over and over again so many times where it is in favor of the news before the announcement is made. In fact, as we look here, here's an older example of Pollo Loco going back to August of this year. On the 14th of August, the shares plummeted 21% after they released their second quarter results, and they missed the mark. It was bad news all the way around. And if we look at the chart here, we see here this is when the news came out, and this is when the earnings were announced on the 14th, and we see that the stock literally fell out of bed. Okay, but most people would say, boy, I had no idea. It looked like we were bottoming out, or some guy in a chat room told me that we had hit the bottom here and that we reached some great support. Some guy in a trading room told me that some trading guru says that all the institutions were coming in to buy. Well, we don't care about those things. Remember, we're not listening to outside sources. We're only listening to the market. And the PET-D is a great tool for interpreting what the market is saying. So as far back as a month or two prior to that, what were the color of the majority of the bars? They were all red. And they were already telling you we're in a downtrend. So if we're in a downtrend, you don't want to be long. You don't want to be long when the colors are green, and you don't want to be short when the colors you don't want to be long when the colors are red, and you don't want to be short when the colors are green. So as you can see, the colors were all red here. There's no business being long anything. So the PET-D had given you a warning as far back as June not to be long the stock. All right, so what happens when we combine the PET-D with strategy number 4? Well, this is what gives us our dynamic duo, and this is what this presentation is all about. We've had so many testimonials. We've had so many people tell us in every state in the country, and in so many countries as well. We've had people as far as India tell us how much these two methods have helped them with their trading, where before they were never consistent, and now they're finally consistent using the dynamic duo. That's when you combine strategy 4 with the PET-D. So how do we apply it? Well, if strategy number 4 generates a buy signal, the PET-D must color that bar green. So in other words, when I told you before, when we saw the up and down arrows, if we get a buy signal, that same bar should be colored green, or else we don't take it. Why? Because we want the confirmation coming from the PET-D as well. Now conversely, let's say we get a sell signal. All right. If strategy number 4 generates a sell signal, the PET-D must color it red. So if the arrow is pointing down over a bar, that same bar must be colored red. All right, so let's look at these examples we talked about earlier. Remember this example in Urban, we had a buy signal here, met all the rules, a valid strategy number 4 signal, but it didn't work. But then this one seemed to work okay. How would we have known which one to take? Well, we apply the PET-D, and buy signals need to be colored green. Is this green? No, it's red. So you would not have taken this trade. You would have bypassed it, and it would have been a great decision on your part, because you would have bypassed a losing setup. Now, 2 or 3 weeks later, a sell signal is generated in the same stock. Do you want to take it? Yes, the PET-D is confirming it. So this one you would have taken, and look what happened. All right, so right off the bat, the PET-D helped us eliminate a losing trade. Even though it was a valid setup to go long, as being generated through strategy number 4, the PET-D is a fantastic tool that confirms whether you should take it or not to see if you're in sync with the short-term trend. In CVX, we had told you about this trade before, met all the rules to go long, all right? But once we had the PET-D, we see here, well, first of all, we see that it was a long signal and it didn't work at all. But once we had the PET-D, it needs to be colored green. And what color was it? It was red. So right off the bat, you would not have taken the trade. Some of the best trades are the ones you never take. All right, so let's look at some dynamic duo examples. In fact, let's go over the same ones I showed you in the beginning where we were only talking about method number 1, which is strategy number 4. All right, MSI, this was a great trade, worked out fine. We were above the 50-period moving average. Strategy number 4 generated a buy signal, all right, but how would we have known whether to take this or not? Because not all signals work. We simply add the PET D and we want to make sure that this is colored green. As we can see, the majority of the bars are green, except for one red, but then the setup bar was green, so that was okay to take. And look what happened. ADSK was a sell signal that worked out fine, but we don't know if they're all going to work or not. So how do we confirm it? We simply add the PET D, and all sell signals need to be colored red. And once we add the PET D, we see it was red, so this would have given us the confidence to take this trade in ADSK. Now, how about that trade in Tesla? Remember, that one didn't work out well. All right, and I specifically said to remember this particular trade. All right, well, it met all the rules. Strategy number 4 said it was a valid signal to go short. But now, if we're trading with a dynamic duo, we increase our odds for success by adding the PET D. All sell signals need to be colored red. As we see here, this sell signal was colored green. Therefore, you would not have taken this and you would not have had a losing trade. I want to show you this example of this older chart here in BIIB, only to show you that many times you will hit home runs using the dynamic duo. Here was a sell signal. It was a little bit more advanced because price was oscillating above and below, but we closed below the 50 period. We closed in the bottom 25%. It met all the other 3 rules of the strategy, and it was colored red. So even though it's a little bit more advanced trade, and you may have been psyched out a little bit by the way it was oscillating above and below the 50-period moving average, the PET D will give you the confidence to take the trade. And look what happened. The stock dropped 90 points in just 2 days. Now, once again, we know this is an expensive stock, $400 stock. Not everyone has the account size to go short a $400 stock. We're not saying you have to purchase or go short the stock. You can purchase long puts if you want. All right, you can just simply buy the options. So it does not matter how you decide to trade this. Now, I also want to show you a news event that happened as well in Volkswagen just this last month. All right, we all know that Volkswagen has been in the news. Some terrible news has come out about their emission scandal, how they lied on the emission tests. In fact, their chief executive resigned less than a week after the company had used software to cheat the U.S. emission standards. So this was on the 23rd of September, just about 3 weeks ago. So if we look at the chart here, we see, well, yeah, that was right here. And look how the stock really fell out of bed, okay? Here's the beauty of the dynamic duo. At this point, someone would say, boy, this stock is terrible. You don't want to touch that. Well, not really, because we are below the 50-period moving average, telling us in advance that we only wanted to be short. And strategy number 4 generated a valid sell signal, all right? But now it's easy to say that this was a good short to take because we're looking in hindsight. We know that the stock fell out of bed. But what if we didn't know? What if some people said, well, this is a double bottom, Steve. This is where all the trading gurus are saying to buy this. It's going to stop and go back up. All right. We don't listen to that. We only listen to the market. What did the PET D tell us? Well, the PET D colored it red. So therefore, we knew to take this signal well before the news came out about lying on the test and well before the CEO resigned. Now we can apply this to ETFs. Here's an older chart of GLD, the ETF that mirrors the price of gold. Here was a buy signal that was generated that worked out very nicely, and then here was a sell signal that was generated that worked out nicely. Did the PET D confirm them? Well, we had the PET D and we see, yes, it did. This buy signal was colored green and this sell signal was colored red. We can even look at weekly charts of the E-mini. These were all valid buy signals in strategy number 4 generated, but if you wanted to use this as a directional tool, so strategy number 4 could just tell you what you thought the market was going to do, well, we simply add the PET D, and we can see that all of them were validated and confirmed by the PET D. Now that's a weekly chart. A lot of our students like to use the weekly signals just to give them a reference of what they think the market's going to do as a directional tool for the market. But if you actually want to trade them, well, we go back down to this daily chart of the E-mini just last August where the market fell out of bed. Once again, everyone was looking at the news or looking at the high-speed computerized programs that dominate the market. Everyone wants to be a victim to know why they didn't do well or why this was so sudden and caught everyone off guard. But if you listen to the market, you're most likely never caught off guard because the market tells you in advance what it usually wants to do. All right, so we have two ways to listen to it. One is method one with strategy number 4, which generated a valid signal to go short. And another one is the PET D, which confirmed the signal to go short by coloring it red. All right, and look what happened to the market after that. Now we go down to the smaller time frame. Remember, we had two signals that worked. This one worked, the second one didn't work, and the last one worked. What about if we apply the PET D? Well, the first sell signal was validated by the PET D. It was colored red. The second sell signal was colored green. So we wouldn't have taken that and we would not have had a loss. Finally, the last buy signal was colored green. We would have taken that and we had a winner. So instead of having two winners and one loser, now we have two winners. So you see how we just increased our odds for success by using and applying the dynamic duo. Now we look at those currency pair charts. Here's the Canadian dollar. We had 3 winning trades. All right, very easy to see in hindsight. But let's say you were a little scared. Let's say you got a little, some of your friends who trade the currency pairs were saying, boy, you can't go long. This guy I watch on TV says to short the Canadian dollar. Well, how would you have had the confidence to take these signals? You just simply applied the PET D, and each one of these buy signals was colored green. So it was giving you the confirmation to take the buy setup. And then lastly, we look at the Australian dollar. Remember, we had this original buy signal, and this one didn't work out at all. It failed miserably. But then the next signal worked out great. All right. How could we avoid that losing trade? Well, we simply add the PET D because it was a valid signal. It met all the rules of strategy number 4, but the PET D did not confirm it. You see, it was colored red. All buy signals, regardless of market, regardless of time frame, all buy signals need to be colored green, and it was colored red. So you would not have taken it, and therefore you would not have had this loss. Now, when the sell signal was generated, it was confirmed by being colored red by the PET D. So you would have taken that one, and as you can see, look what's happened coming up into this week in the Australian dollar. So let's recap. We shared with you the two methods that make up our most popular and consistent methods to date, and that's when we combine the PET D with strategy number 4, and this makes up our package, which we call Specialist Trading's Dynamic Duo. Now, ask yourself, before we conclude here and go into a question and answer portion where I'll answer all of your questions, do you think these edges could have helped your trading this past year? We're getting close to the end of the year. We've only got a couple of more months left. And I know everyone starts out at the beginning of the year with all these hopes and all these goals of what they want their trading to be. And most of the traders I speak to, most of the students I've had in the past before that just joined, they've told me they've never reached them. They've never gone up to those levels of consistency that they're looking for. Do you think the PET D could have helped you? I've shown you a number of examples in all markets and in all time frames. This is what we're offering to you before the year comes to an end, our dynamic duo. This is Primo strategy number 4 along with the PET D tool. All right, we're going to give you our dynamic duo special, instant course access. All right, you're going to be up and running as soon as today if you wanted to become a member of mine with the dynamic duo course. You get all the entries, all the exits, all the stops, the remaining rules to strategy number 4, plus you get the PET D. All right, you get all that included plus the add-on. So in other words, you'll get all the software that automatically generates those up and down indications, those buy and sell signals, as well as the add-on and software that will automatically color the bars either green or red. Lastly, you get lifetime correspondence with me. You are my student for life, so you can ask me questions whenever you like. We don't just simply give this to you and say, good luck, study the course materials and let us know how it works out. I'm your mentor all the way. All right? I'm there right alongside with you, trading and answering any questions you may have. Now, what we usually say with our members of the Dynamic Duo course is to study the material, paper trade for a while, and really get the the information, know it like the back of your hand, so you really fully understand it. And once you do, then we supply you with email alerts. Okay, if you're in the stock portion of the course. And these are this is an example of what you would receive as an email alert. Now this came out on the 28th. This for trading date, the 28th. So it was just a few weeks ago, and you would have seen all the signals that were generated. I want you to particularly pay attention to PYPL, PayPal. There was a strategy number 4 signal to go short here. As you can see, we tell you what the stock is, and we give you all the other information provided. Now this was a valid setup to go short. We're below the 50-period moving average. That's rule number 1 I share with you. And we close in the bottom 25% of its bar here. That's rule number 2 that was met. Now all the other rules, the remaining 3 rules of the strategy, were all met as well. So on the 25th of September, a signal was generated to go short. So if you're an aggressive trader, you could have gotten short that day, or more conservative, you probably go short the next day. Either way, you learn the rules and you would have been able to take this signal if you wanted to. But as a beginning student, you'd say, well, Steve, I'm not really sure. I'm a little bit scared to pull the trigger. So once you're a member of the Dynamic Duo course, all you have to do is apply the PET D. Whenever a signal is generated, you just want to make sure it's confirmed, and that will give you the confidence so that you do not have to be afraid to pull the trigger and you can take the trade. So this was just on the 25th. And as you can see, the sell signal was confirmed. It's colored red by the PET D. So in the next 2 days, the stock dropped about 3 or 4 points. Now you could have taken an easy, quick profit on that, or however you wanted to trade it. It would be entirely up to you. But this was an actual signal, an actual Dynamic Duo example. Now, we don't just stop there. I'm not just trying to cherry pick things that have happened in the last month or so. Let me show you what happened this morning. Okay, so because we're seeing these examples all the time. This is not just something that happens as we look back weeks ago. This morning, if you were intraday trading the E-mini futures, here's a tick chart, a 2000 tick chart of the E-mini futures. As we see here, price is above the 50 coming into this day, and these were all bars that closed in the top 25% of the range, and they were all valid signals to go long. At the same time, you can see they're all colored green. So the Dynamic Duo generated 4 winning trades in the first hour of trading today. Now, at their very minimum, each signal would have generated, I believe, about 3 points in the E-mini. That's about $150. So roughly, this is just an estimation, $600 roughly in the first hour of trading per contract. So that's not a bad way to start the day off in the first hour, being up $600. These are all valid strategy number 4 setups, and they were all confirmed by the PET D. So as a member of our Dynamic Duo course, you would have been privy to all of these setups. And lastly, a lot of people say, well, Steve, can we use the PET D as a directional tool? Do we always have to use it to confirm a signal? No, it's probably the best tool I know that tells me the direction and the trend of any market, any direction, any time frame. This is a monthly chart of the S&P index going all the way back to 1995, 20 years ago, all right? We see all the peaks and valleys of the market. We see how we topped out here in 2000 at the dot-com bubble, and then how the market fell out of bed all the way down to 2003, and then we started to rally back up again, and then topped out again in the banking real estate crisis in 2008, and then we fell out of bed, and how we've been going up ever since. And this is the action that happened last month when we had that large sell-off, okay? And remember, the rule of thumb is if you see consistent colors, that's the trend. Anytime you get 3 consecutive colors in a row, that tells you the trend has changed. So if we apply the PET D, what we see here that the entire way up, we were green coming up into 2000. And then we had 3 red bars here in late 2000, which could have told you that the trend is changing to go lower, and you could have exited this entire debacle here in the market for the next 2 years. Now in 2003, we had 3 consecutive green bars again. You could have been back in the market, riding it all the way up to the tops here, up into 2007, where we had 3 red bars, and you would have missed the entire sell-off here going into 2009, 2010. In late 2009, 2010, 3 consecutive green bars, and we've continued to be the majority of green bars the entire time up. Every once in a while we have 2 red bars here, but remember, we need at least 3. 5 would be better, but all we need is a minimum of 3. Now look what happened this last month. We had a red bar here, okay? So this is going to be interesting. Wouldn't you like to know when that changes to 3 red bars? So this is every month. So at the end of October, we will have the color of another bar. Now, it's not just enough to say, well, it just means if we have a really bad down month, then I guess the bars are red. And if we have a good month, the bars are green. No, that's not true. If you look at some of these examples here, not every bar is green or red because it's up or down. So the PET-D can help you with your long-term investments as well. It's a fantastic tool to be used as a long-term trend identifier. So we are throwing both of these in as a special for all of you today. This is our Dynamic Duo special. Once again, you get instant course access to strategy number 4 as well as the PET-D tool. All right, now Pro Trader Strategies, the site I've teamed up with, they market and promote all of my courses, all of my strategies, all of my different techniques and things I've accumulated in my 38 years. They have this advertised for close to $3,200. That's how valuable it is. We're dropping the price today for all attendees down to $24.95. All right. As well, Pro Trader Strategies is offering payment plans. For a limited time, you can just put down a small deposit and you can be up and running with a payment plan. You can still get everything right sent to you, but you will only have had to put down a small payment plan. So that's the beauty of what we're presenting today. You don't have to come up with the lump sum if you can't have that available right now. You can put a smaller sum and just simply be up and running with the Dynamic Duo. So here's how to take advantage of that great deal. Once again, Pro Trader Strategies handles all of my marketing and of my courses and my selling. You can contact them either by calling them directly at area code 310-598-6677 and put together that payment plan, or you can go to the link below, simply copy and paste that onto your browser, and that will take you up to the sign-up page where you can be up and running in a matter of moments. Now, that's not a live link. This is a PowerPoint presentation, so it's not live. But if you look in your chat box to the right, there is a live link that Pro Trader Strategies has posted for you. It's there in blue, and all you have to do is just simply click that on, and it will take you to that sign-up page. But if you'd like to put together a payment plan, remember that's only going to be available for the short term, so call them up or email them at the email address on top of the phone number, and they can set up a payment plan with you where you can be up and running very soon just through a small deposit, okay? All right, that's all the information to get the course, to be a student of mine, to have lifetime correspondence with me. I'm going to keep this up so you can copy this or directly go to the sign-up page, and then I'm going to open up the question and answer box. And I want to thank you all for holding off any questions, and I'll answer them to the best of my ability right now. Let me backtrack. Let me go to the beginning here. I see there are a number of questions, and so I don't want to leave anyone out. Let me just see here. Siraj says, how do you filter the bad signals? Well, I guess, Siraj, I see that you answered this 20 minutes into the presentation, so you weren't waiting around for the PET-D. That's how we filter out the bad trades through the PET-D. That's how we really increase our odds for success. Now, just let me tell you, strategy number 4, just by itself, has a very high level of consistency. We have people that just trade strategy number 4, but once they move up to the Dynamic Duo course, they say, boy, why did I waste my time? I should have been in this the entire time, because it tells you which ones to trade and which ones not to trade. So therefore, it keeps you out of those bad. Plus, there's a number of other uses for the PET-D. It's not just meant to be used with strategy 4. As I showed you, you can apply the PET-D as a trend identifier for long term. There's also 4 separate trading techniques that come with the PET-D, entirely different from what I shared with you today. So there's a lot of great information in this course, okay? Let's see. Someone is asking, what are the other rules to the strategy number 4? Well, that's like going to a restaurant and saying, thank you for the appetizer. Can you please give me the entire meal for free? Can't do that. That wouldn't be fair to the people that have paid full price for the course. You're here to get information, but at the same time, we also want you to become members and students of mine. So, we can't just give that away for free. But I just gave you 2 of those rules. You've gotten just about nearly 40% of the rules to strategy number 4. Okay, it wouldn't be fair if I just gave you everything. Okay. Mahmood is hello, Mahmood. He's a very good student of ours, and he says the PET-D is wonderful. Thank you, Mahmood. Yes, he hasn't been with us long, but it looks like he's doing very nicely with it, and that's great. The PET-D is a great tool. I have continued to use it for over 30 years. So I use it every day. I use it today in my trading before I began today's presentation. It's a great, great tool. I don't look at other trend identifiers, short-term trend identifiers. The 50-period moving average is a great tool for the overall trend, but the PET-D is the best thing I know to identify the short-term trend, okay? Gabriel asks, which time frame do you use to make the analysis to decide your entry, and which time frame do you set up for bars? 1 minute, 5, 16 minutes? This is probably one of the most common questions I get. And basically what they're saying is, tell me which time frame to use, all right? Remember, as I stated in the opening phrases, that is a recipe for disaster. There is no perfect time frame. Everyone approaches the market differently. I always tell this, I've told this story in many of my presentations and seminars. Years ago, when I first left the floor, I had a number of people that wanted to learn how to trade from me. So I taught them, they actually came over to my trading desk, and I taught them my strategy, my time frame, what I was using. It was strategy number 4 at the time. I gave them all the rules. I told them exactly how to enter, exit, and they knew everything. They sat with me for roughly a week. By the end of the week, they all went on their ways to trade on their own. Now, at the end of that week, it was a very good trading week. I had some losers, but most of them were winners. It was a very good trading week. I asked how all of them did, and the majority of them lost. In fact, one particular gentleman. And I asked him why, and he said it came down to he couldn't follow the rules. He couldn't pull the trigger. He couldn't trade the exact same way I did. And after a lot of soul searching, we found out that he wasn't a day trader. He didn't feel comfortable trading the strategy on the time frame I was trading. Once we found out what type of a trader he was more of a swing trader. He used the exact same rules, and he started to have consistency. So I learned a great truth that day, and that no one trades the same. There is no way to say this is the right time frame, and this is the perfect time frame, and this is the perfect market. And that's why that's not our philosophy at Specialist Trading. We don't believe in that. We feel that we give you the information, we mentor you as my student, but then we work with you to find out what the best time frame is for you, what the best market is for you. You don't have to trade the E-mini. You don't have to trade the futures. You don't have to trade currency pairs. You can trade whatever market you want. The strategy works in every market and time frame. So therefore, I don't like to tell people what the perfect time frame is, because it works well in any time frame. All right. So the best time frame, I always tell my students, is the one that makes you feel comfortable, because that's where you're going to find the most success. All right, let's go to the next question here. Can I plot strategy number 4 and the PET-D on the same chart in Metastock? First of all, yes, you can. Okay, this is a great tool of Metastock, but it does not allow 2 on 1 chart. So in other words, you have to use 2 charts. In other words, okay. If you have more questions with this, I would say contact Pro Trader Strategy. Their tech support is really great, and you can help them with this. But it will allow you to put these together. But I believe at one point the different edition of Metastock is something different that hasn't come up to speed yet with our tools. So I would contact Pro Trader Strategies tech support, and they can set you up with that, okay? Or they can alleviate any problems you may have. And I know it does work with Metastock, but certain levels of Metastock, certain programs, it has not been able to work properly. And that's more of a Metastock issue as opposed to our issue, okay? Rob asks, what kind of risk management do you personally use to survive these pullbacks? Well, once again, risk management is subjective. Everyone has a different way, and we teach you all of this in the course. I have a particular way in which I use and where I place my stops, and how much contracts or shares I'm going to be trading, and where I'm going to be exiting, risk-reward ratio, things of that nature. There are a number of ways in which to use it. There's no right or wrong way, once again, just as if there's no right or wrong time frame. It all depends on what makes you feel comfortable. Because risk-reward and money management, this all has a lot to do, and risk management all has a lot to do with your account size as well. So there's no right or wrong answer in that. Once again, these are all very subjective ways to answer, okay? Rob is asking, does it work in MT4? Yes, it does. Let me tell you what the charting software programs are that can be applied the dynamic duo with, okay? TradeStation, Metastock, MT4, NinjaTrader, and Thinkorswim. There are a few changes you have to make with Thinkorswim, though, because Thinkorswim, you can use their data for free on a free platform of NinjaTrader. So in other words, all you're doing is you're using your thinkorswim data, and we just supply you with a free platform of NinjaTrader, and you use the indicators on NinjaTrader. Okay, it's very simple. Once again, our tech support will help you set that up. Okay. Mahmoud says, thank you for the indicators used every day for the market and for all markets. Great, Mahmoud. Thank you. I'm glad you're doing well, too. Glad that it's helping you and glad that you're seeing a certain level of success with your consistency. Shiraj asks again, but what is the other method to filter bad signals apart from PET-D? Well, you know, we give you different tips and techniques. It's not a specific method. We show you different ways in which we look for high probability setups and ones that aren't so high probability setups. But this is in the course. This is all privy information that you can only receive as a member. Once again, this is valuable information that I've accumulated in 38 years. It wouldn't be fair just for me to give it away for free. You know, this is part of the course, and this is part of the teaching, the student-mentor relationship that you get by becoming a member. All right. Yes, they're asking if this is being recorded. Yes, it is. You can call or email Pro Trader Strategies, and they will send you a link to this recording if you happen to have difficulties or have to leave early. Okay. Alan asks, do you use a hit list of stocks to review each day, or do you scan the whole market in order to find trades? Well, Alan, I'm very old school. Once again, I've been trading, you know, since the 70s, so I personally look at the entire S&P 500 because I've been doing this for so long. It's very simple for me to look. I don't even have to rely on the up and down arrows. I just look automatically, and I know when a signal is generated or not. I just simply hit the next key, and I can see it very simple. I wouldn't recommend everyone do that, but it takes me roughly about 45 minutes to do that every day. It gives me a good feel for the market, and I like to look at all the stocks. Okay. Having said that, you are able to scan most of these charting software platforms. You will have a scan, and you can scan for this. So what we recommend to most students, especially beginning students of the PET-D course, is to, you know, get your own hit list of about 20 or 25 stocks and just look at them on a nightly basis. All right, and you'll see right off the bat. It's very simple to see if there's a buy or sell signal generated by the up and down arrows, but over time you'll be able to see them even without the arrows, and this is what we encourage as well. We don't want you to rely on those arrows. We just want you to use them as a learning tool. Once again, over time you won't even have to use them at all. You won't need them. But you'll also see the PET-D applied on your chart and go through 20 stocks, 15, 20 stocks a night, and you can see them very simply. It's very easy to do. Okay, that's what we would suggest to most of our students. Rather than look through the entire universe of stocks, there's just so many stocks. And as a beginning student, we wouldn't suggest that. You should know about 10 or 20 stocks that you prefer and just stick with those in the beginning, okay? Avi asks, which broker is the best to use for this strategy? Well, we don't have any affiliations with brokers, and I really can't give out that information. Remember, we don't care what broker is the best. Most charting softwares have their own automatic entries. They're very simple, and this is not an advanced strategy to trade. Remember, it's very moderate strategy, so you can enter and exit this on your own. Yeah, you can basically just use their automatic entry, and you can just enter the orders. Okay. Obi asks once again what the charting platforms are. Remember, the basic charting platforms are TradeStation, MT4, Metastock, NinjaTrader, and thinkorswim. You can use this with thinkorswim, but please remember that with thinkorswim, all you need is a free platform of NinjaTrader, and then when NinjaTrader asks you what type of data you want to use, you're just using the data from thinkorswim. I believe it's I can't think of it right now, but it's just their brokerage that they use for that. And it's very easy. It's all for free. Once again, once you become a member, we'll help you set that up, and our tech support will set it up for you as well for free. Okay. This presentation was being recorded, so if you had to leave early or if you'd like to look at it again, feel free to just contact Pro Trader Strategies. They will send you the link, and so you can watch it again. But please remember that special discount to the PET-D and the strategy number 4 rules is only going to apply for a couple of days. Then the price goes back up to $3,200, and most likely beginning of next year, we're going to increase the price again because it's that valuable. We've had such great feedback. In fact, do a Google search, look at the blogs. You can see how well people have done using our dynamic duo. So if you really want to get your trading back to where you thought it would be at the beginning of this year, if you want to get it ready for 2016, I strongly encourage you to become a member of my Dynamic Duo course. I use it on a daily basis, and I'm your personal mentor there with you every step of the way, okay? So, in conclusion, I want to thank you all for attending today. I really wish you the best of luck trading. I look forward to all of you becoming members of the Dynamic Duo course, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.